Thanks to our friends at The Motley Fool for sponsoring this video. Visit fool.com/Rive to receive the top 10 stocks to buy right now. Molson Coors announced earnings this week, and it continued a long trend of the big beer business really struggling with growth, although the numbers did look a little bit better than they did a year ago. So I want to dig into exactly what's going on and what the long-term trends are for a company like this. My name is Travis William. Thanks for watching Rive Investing. Please subscribe here on YouTube for all my content. And let's get right to the numbers. I'm just going to use the presentation here because they present the numbers pretty nicely, but net sales revenue was up 8.2% in the quarter. Underlying income before taxes, so they're taking out some adjustments and do this on a constant currency basis, up 83%, and underlying earnings per share up 86%. Those are off of relatively small basis. So that's one of the reasons that the percentage is so big there. But in the beer business, if you've been following this for a while, you know that the challenge is that there's two pieces of growth that you can have. You can increase the volume of sales or you can increase your prices. And the challenge for a lot of these big beer companies over the last half decade, maybe even a decade, has been they've been losing market share. So even if people are drinking more beer, more spirits, they haven't been able to increase their volumes because a lot of that growth is going to smaller producers. And that's actually exactly what we see in the results. This chart on the left shows that volume was actually down in the quarter, but prices were up significantly and mix was up. That means that people were buying more expensive beer or spirits than they were a year earlier, but they're not actually consuming more. So there's a limit to how much you're going to be able to raise the price, especially on a lot of the products that Molson Coors makes. Here, management covers the consolidated underlying cost of goods sold, and you can see that inflation is having a lot of impact on results. Costs are up 7.4%. Even though revenue is up significantly, that revenue growth is getting eaten up by higher cost of goods sold. Now, management was able to cut some operating expenses, so that was a positive for the quarter. But there's also a limit on that. This is a business where you need to spend money on things like advertising to get the kind of demand that you need to keep your factories busy. So at the end of the day, the best kind of growth is volume growth, and that's not what we're seeing. Investors are definitely cheering the results today. Shares were up 7.6%, and I do think it's positive that Molson Coors is able to grow the business. It's got a nice 2.5% dividend yield, but the challenge long term is the same as it has been for the last half a decade, and that's that volume is not growing in this business. And the only real growth driver the company has is to increase prices. I don't like that position for a company. I would like to have more organic growth, but that's just not what we have in the beer and spirits business right now, especially from some of these bigger established companies. So that's why I'm just not a buyer here. Investors may be happy with the results, but if you dig a little bit deeper, I don't think that growth trends are all that sustainable. What do you think about results from Molson Coors? I'd love to hear your comments in the comment section below. Don't forget to follow Rive Investing. Thanks for watching, everybody. See you here next time.